This is Saluna's podcast. We have a couple formats that we do. We do roundtable discussions about current events. We've done introductions to the team, business plans, and we've talked about our business model and executional models. And then, of course, we also like to interview experts in fields that we touch and build thought leadership. In this case today, we will be interviewing Andrew. Andrew is a member of the Fieldstone group based out of the UK, and they are focused on renewable energy development in Africa and other parts of the world. With that short intro, Andrew, do you want to introduce maybe the firm, first of all, beyond what I said?
Well, I think we've been doing stuff in Africa now for almost 25 years. So we started a long time ago, before it was before renewables were really the thing, and before Africa became kind of a real sort of frontier market of interest. The origins of the firm have always been very much in energy and infrastructure. And a few years back, we took a view that the area which interested us, or most of us most, was the emerging markets and Africa in particular. We do other stuff in Europe as well, but I suppose the emotional heart of the firm is in what we've been doing in the continent.
You've been with the firm for all 22 years of its life?
No, although actually the very first deal I ever did as an investment banker, when I was allowed out by myself, was actually a joint venture between the firm I then worked with and Fieldstone, when we were advising some same clients. So I have actually known Fieldstone right from its inception. And I sort of joined Fieldstone properly back in 2001, and now I'm one of the main shareholders in the business as well.
Great. In terms of your background, psychologists ask you always, what's your first memory as a child? What was your first memory in terms of either capital raising or working in Africa or just business generally? Give us a start and tell us how you got to where you are today.
Well, my first memory of working in financial services actually goes back to Japan and the late 80s and the bubble era. And I suppose that since that time, there have been many financial bubbles, and you kind of get a smell for them. I was in Asia again in 97, and then you see these sort of bubble situations. So I guess my first memory was kind of what it feels like to be in a bubble. Yeah.
And what were you doing? First of all, how did you get to Japan, and then what were you doing there?
Well, I was hired to go there by somebody who helped me. Said I thought you would do well in investment banking, and so I kind of just went off to Japan, not knowing anything about Japan or investment banking, and kind of just got started on it. So that was the origins.
And how many years did you spend in Japan?
There for 3 years, and then I then came back to the UK and got thrown into the whole of the electricity privatization. So my involvement with energy and power goes back to the early 90s when the firm I was with, it's called Kleinwort Benson, latterly then became Dresdner Kleinwort Wasserstein, was doing a huge amount of privatization work, and the power industry was the one that they were leading on, and that led us on to doing a lot of work for other governments around Europe, in Portugal and Italy, as part of that big sort of thrust towards privatization.
So that's a very interesting. So your first experience in power had a lot to do with, I guess, changes in the regulatory landscape and governments asking themselves, how are we going to power these nations? How are we going to induce economic growth? How has that affected your experience working in Africa, and what sort of tools in the toolkit has that given you?
Well, I think it's actually a very interesting question, because where it starts from was in the UK the creation of a market. A market for power that previously no one had conceived of. And that probably, more than the change of ownership, was the fundamental change that was taking place in the UK at that time. And in some ways, you could say, well, as far as Africa is concerned, that has not really been a feature of the market. The traditional market in Africa has been, big projects, long-term PPAs, and a kind of a rather sort of static approach. But I think that we are seeing some really interesting changes in this area. A market I'm very familiar with is Nigeria, and there, the power system, has serious challenges. And one of the tools that now people are starting to, use there is direct sales to eligible customers using the power network. And that's the sort of the first stage of moving towards a market for power. If you look in South Africa, or Southern Africa, I should say, and the South African power pool, you see then, we have clients who are looking now to find ways to trade their power, and to ameliorate positions that they have with utility off-takers, to try to find ways in which they can get direct access to customers, where major utilities are having trouble paying their bills. And as where we're working in Morocco, some similar things are happening there as well. So I think that this, the transition towards where you're not just selling to a utility, you're selling direct to your customer, or creating your own customers, becoming a more and more important part of the landscape.
You just talked about an important lever, which is driving investment in Africa, which is changes in the regulatory landscape. But can you give us a sense for, if we go, however you want to break it up mentally, 80s, 90s, 2000s, and then today, or if you want to break it up into distinct changes, if you think about either Africa as a whole, sub-Saharan Africa, what have been the phases in evolution in power development in Africa? And you spoke about it transitioning into a true sort of frontier market where investors have turned their eyes in the recent past. When did that happen, and what has driven that?
Well, I think the first thing is that Africa is not just one flavor. Africa is hugely diverse, and so it's different situations, maybe the same questions, but very different answers in each of the different countries. And maybe working backwards, because when you look in the rearview mirror, it's what you've just passed or what's going on at the moment, which kind of seems most relevant and most vivid. I think that we have historically had the kind of an image, or industries had an image, but what it should be trying to replicate is kind of exactly what has been in the developed markets. The kind of the notion of you have your power stations, you have your transmission, you have your distribution, and that feeds down and creates universal access. And at this point, that model is being really challenged, and it's been challenged, I think, in very good ways, because advent of renewables, different technologies, is really changing the way that people think about this. To give you an example, there are a number of companies across the continent which are putting small 80-watt meter by meter solar panels on people's homes and giving them batteries and to charge and to run their mobile phones, some lighting, some small electrical appliances. This is transforming the sort of the last mile. And so the need, the desire, the economics means that suddenly people who've literally been in darkness now there's affordable ways for them to gain access to power. That's hugely transformational. I think in some so that's one big trend. The advent and impact of renewables is also another clear thing which has been going on. And a couple of points on that. I think that the scale and size of renewable projects means that they are more digestible.
And by that you mean the dollar values of CapEx is lower. You're not building these $100 million plants that are just okay.
Exactly. And you can be building them, closer to their markets. So you then that allies itself with the mini grids that other people are developing to deal with other demographic parts of what's going on in different countries. You're seeing, and that then means, of course, we've still got intermittency on a lot of those things. So you can balance that off with some smaller scale generation. So you're seeing a kind of I call it a quilt. Of different solutions being targeted at different demographics, different countries. A whole variety of factors drive, which pieces of silk each country needs to knit together to create a total solution. Yeah. And that, I think, is the most interesting and challenging thing. And I would say that it's in many ways, Africa is leading in some of this thinking, because particularly for countries which don't have the benefit of strong legacy grid and distribution infrastructure, and very few do, but for countries who don't have that, it creates different models to get to bring power to individuals. I mean, who knows what one might have done in many other countries around the world if you hadn't started from the infrastructure which people have inherited.
Sure. So just to recap, I mean, essentially what I just heard you say is the Africans are developing a solution that's tailored to the African context, and they're sort of pulling levers depending on their unique situations, which include sort of delivering power at the last mile through very small scale solar panels or other deployments. You have mini grids, smaller size and scale projects located closer to the customers, but still they face challenges like intermittency and electrification generally. Now, the question that I have is, if you're saying they have these different levers, they're building a new solution, a new type of power infrastructure. I read a McKinsey report recently that said that sub-Saharan Africa has, call it 15% of the world's population, but half the world's population that still lives in darkness or that's not electrified. If you say, okay, there's a new grid framework, a new infrastructure that's being overlaid to solve these problems, what has to date impeded a more traditional infrastructure or system from rising in these countries? Is it geopolitical? Is it lack of capital? Is it regulatory? What has impeded a deployment of a more, let's call it, conventional energy infrastructure?
I need to unpack that question a little bit.
Sure.
I think that within the amongst the large numbers of people in Africa have very low disposable incomes. And for that demographic, the cost of bringing a wire to the home is very high for utility, because the load and the amount of money that people can afford from their wallet to buy power is limited. And so a lot of the challenge there has been, this is not really a particularly economically efficient solution for those people. The new technology is making that a very different proposition. It may be that in areas which have got some reasonable amount of disposable income, the mini grid helps because you group people together and you're not having to bring the power in from a long distance where the generation was. For people who are a farmer sitting in the middle of a country, to be able to have he may not live in the village, so to have a rooftop solar thing absolutely is so much. The cost is $150 compared to $1,000, whatever it may be, to bring a wire to him. Mm-hmm. So there's a appropriateness of the technology given the consumption and the wallet that people have to spend, in order to get a return. Because otherwise, if you subsidize it, which is the alternative, it puts a huge burden on the utilities. Mm-hmm. Then if you then start going away from that demographic, I think that in many countries, the utilities, who are, if you take the major urban, major cities, there you have got across many places electricity systems which simply do not function properly, and there it is fundamentally for a combination of lack of investment and an inability to collect tariffs. Either tariffs have been too low, or there have been or high levels of technical and non-technical losses. So you can't sustain a power system unless you have got the money coming into it. And these are people who are not, they can't be subsidized, because they've got no economic justification to be subsidized. These may be middle class people who, in the context of the country they live in, are well off. Yep. So if you don't set tariffs at the right level, if you start to treat this as a public service in the sense of a universal benefit, you very soon have the most expensive power of all, which is the power you don't have.
Let's talk about the demand side of the equation. You said earlier, people in rural areas, they can't bring a wire to themselves because they have low levels of disposable income. It's hard to justify that cost. You could argue conversely that because they don't have access to power, they're not able to generate the incomes. As electrification comes to Africa, how does that sort of demand change? How is the demand changing today, both in rural and urban areas? And how does electrification change the nature of demand? Does that result in more demand for more electricity itself?
You said something there, which is there are examples of exactly what you talked about, where people have gone to develop mini grids and they have come across situations where they've realized that people actually are economically inactive. So to pay for the power, they then had to do other developmental activities to assist people to empower them so they actually do become economically active, and in that way start to be able to pay their bills. But that would be to say that was the whole situation. It wouldn't be true. Mm-hmm. There are lots of places where simply having light and power to be able to people are already consuming power, or they use kerosene lamps for their lighting, which is a very expensive form of lighting. They are charging their mobile phones, but they have to go to somebody who's got a source of power and is running a generator or a battery, and who will give them that ability to recharge their mobile phone. I mean, there are a lot of people who their current energy is very expensive, so yes. Alternatives have a ready pickup. on an economic basis.
What about in urban areas? Are rates of electrification, and you can break it down even further. I just I'm holding it to the level that I understand. But if you look at urban areas in Africa, is the intermittency problem, does it persist? Is that going down? And is demand? I mean, we're looking at big data center deployments in places like South Africa. Intermittency is vital to these types of technology in terms of it's a pernicious problem. So, is the demand in urban areas changing as well?
I think that maybe just look at some examples. I think if you look at the demand in say a city like Lagos, demand for power is going up. The amount of unserved power from the distribution systems is enormous.
Yes.
People will typically be spending have more hours without grid power than they do have it by a substantial margin. So there is.
Is that intermittency problem a power production problem, as in there's not enough power being produced, or is it a delivery problem fundamentally?
It is almost everything.
It's almost interesting.
So it's a problem caused by transmission constraints and inadequate transmission availability. It is a problem caused by poor maintenance of some of the power plants, so the capacity isn't there. I mean, the statistics would show you that in Nigeria, demand or output has very rarely exceeded 4,000 megawatts at any point in time for 8-10 years or so.
Wow.
Yet the economy has grown in that time. So, I mean, it's absolutely the case that demand for power has far outreached the has grown, and the capability and investment ability to deliver that power from the grid has simply not kept pace in any which way. So what people are doing is, all industry is running on its own generation, depending where that is. Some of it would be diesel fired, some of it would be gas fired or CNG, compressed natural gas. As now solar systems are coming on board, people are looking, particularly in the better solar conditions are better. They will be having a lot of people are trying to invest in industrial sort of parks and solar on factory roofs and that sort of thing to minimize and reduce the amount of diesel which is consumed, and that makes huge economic sense.
Now, if we've talked a lot about the market and the demand side of power, if we turn it to the investment side, from what I understand, sitting here in New York and speaking with the investor community, infrastructure funds and infrastructure funds facing Africa have, like many other alternative asset classes, raised, tremendous amounts of capital. And tremendous amounts of capital remain what we'll call undeployed, uninvested, and sitting in sort of dry powder. When I speak with my friends who work in infrastructure in New York, I feel a tremendous sense of frustration from them in terms of doable projects and projects they can invest in. Is that the sense that you have? And if so, what has impaired these funds from being able to deploy capital into the African continent?
Well, it is true that there's been a lack of projects, and a lot more could have been done by the private sector if more IPPs had been developed. Now I'm going to say something which not all my colleagues would agree with, which is that in some ways there is a there's a problem with a view which says we're going to come from Europe or the States or wherever, and what we want is to have our projects all tied up with a golden bow of essentially a government guarantee sitting behind them. I mean, that's the model at the moment for any on-grid project. And it's the model at the moment for very understandable reasons. I'm not really criticizing the investors for asking for it. But in essence, the power business, going back to the start of this conversation, the power business can be a much more entrepreneurial activity. And once you have access to customers, then you can control the customers who pay and those who don't. You can create models which don't require this government support. Of course, you've got to have protection against expropriation and that sort of thing. But if you're in a situation where you're forced to sell to utilities which are government owned and they're not really paying their bills, you end up basically everything ends up being structured as a claim against government at the end of the day. Mm-hmm. And that creates a lot of difficulty for the governments because they don't, they don't have necessarily the cash available to fund that, and mm-hmm. They then have discussions with World Bank and IMF or whoever else it may be, and people recognise that these things are essentially government borrowings in all but name, or they can become borrowings in all but name. So we have to break the mold on that, and I think that the way to break the mold is by freeing up the ability to sell to customers, and the basic notion of if you get, you must pay, and if you don't pay, you don't get. So if you open up the market in that way, I think you begin to unlock this problem. The other thing, which I think is really key, and if you look at many other emerging markets around the world who've been down this path before, is a mobilization of domestic capital. Because if foreign investors want dollar or euro returns, and that pressure creates a sort of a real concern that if and when a devaluation event comes on, you also get a power price shock, and then the whole thing is fragile and not particularly stable. And if you look at successful IPP programs around the world, it's very noticeable. The ones which have really stood the test of time and not had to have bailouts have been the ones which have relied largely on domestic funding. Now, that, in most economies in Africa, is a real challenge because the pools of capital don't yet exist, but gradually, slowly, they are beginning to come through. You see it in South Africa's case, where all the PPAs are denominated in rand, and that has sort of demonstrates a very a very successful approach, because you've got local currency, you've got local institutions who can fund long-term rand-denominated debt. So the whole thing works. I mean, that is what everybody needs. It's that type of model everyone needs to be working towards.
That's very interesting. And so for you guys, as you sit in this investment banking seat, which is a mix of transaction work, but also advisory, I'm guessing it's mostly advisory to the project developer side. What sorts of things do you have to bring in your team and with you to do business in Africa that you didn't have to do when you were doing business in Japan or Europe or other geographies?
Well, some of the things are the same. You need to have local touch and local presence. I mean, and I think and also maybe more so than in more developed markets, but I think it's almost a universal truth. FaceTime is terribly important. if you don't have a FaceTime with the people who are on the other side of the table from you, you don't make progress. And I think I know from my the time I spend in places like Nigeria, you've got to put the time in front of people to get things to change. So you can't just be kind of doing it from a desk somewhere. So that I think is maybe I don't know. You may ask me the question again, but it's that's kind of one of the most important things.
No, that's great. So, if you had to provide advice, if you had a billboard that capital markets participants could see with regards to Africa for the next 20 years, what's the advice? What's the action that they should be taking? You've already mentioned one thing to investors, to be willing to be more entrepreneurial, but are there other pieces of FaceTime is another one, but what are the other pieces of action that you think people should take as they think about working and doing business in this context?
I think that the three features that we're going to have going forwards is one, much greater reliance on local sources of capital. Two is got to be a realistic approach to cost reflective tariffs. And we have to have a situation where people are, if you don't pay you don't get. I mean, it's a vital thing. And I think the third thing is going to be this quilt of different solutions to tend to different demographics and local situations, which will make up the kind of the A to Z of the power industry, whether you're in a big industrial or whether you're at the other end of the spectrum, somebody sitting in a very remote place tending a farm.
Well, this has been fascinating, Andrew. I want to thank you for your time and really enjoyed the interview today, and look forward to continuing to work with you on our project.
Well, so do I. Thank you very much.